Hello traders, my name is Raymond Avonyo. I'm speaking on behalf of Akum Forex. Over the weekend we had another Ichimoku section, and this is a short video review of what we did in our trading center. We call this Ichimoku 201, and in this video we're going to do a review of what we studied in regards to which trades we should be taking with Ichimoku. Back to our charts. Okay, with Ichimoku, not all trends are the same in terms of Kijun Tenkin crosses. Not all of them are the same. As a trader, your focus must be to look for strong and medium strength crosses. When we say strong crosses, for example, if you look at our cursor, this is a medium cross. This is a strong cross, and I'll explain. And that is a weak cross, and I'll explain. All right. Let's start with the first one. With a weak cross, it means that the sell signal here occurred on top of the cloud. Usually the cloud is, or what the cloud stands for, is basically support and resistance. And what we have here, price is above the cloud, so we have a support here. So the sell signal that is above the cloud is considered a weak signal. It's considered a weak signal because you have two lines of support here. You have the span A and span B, if you remember from the last week video. So you have the first part of the barrier stopping cloud, stopping price from moving downwards. You have the second line here stopping the price from moving downwards. So we don't take such trades. It means that it doesn't mean that the trade will not work. Sometimes it works, but the probabilities are below 40%. We are shooting for trades with very high accuracy, so we are looking for things or trades that will give us about 70 to 75% accuracy with Ichimoku. So for this one, we will not take it, okay, because it is a weak, very weak sell signal. Now when you come here, next one, this is a medium strength signal. It is medium. We call it medium because the cross happened inside of the cloud. This cross, it happens inside the cloud. If I move the circular away a bit, you're going to see clearer. See, this is where the cross happened, inside of the cloud. So it's called a medium strength cross. And for Ichimoku traders, we look for either strong crosses or medium strength crosses. And when you get a medium strength crosses, you place your risk management tool, that's your stop loss. Okay, usually with this, your stop loss is going to be the other side of the cloud. So this is where the price broke above the cloud. So underneath is we have this line. This is where our risk margin, this is where our stop loss is going to be. Okay, and then you see trade rallies above. Okay, trades keeps going up and then shoots back and it keeps going up about 680 pips. Even if you decide to exit here, you have about 295 pips. So Ichimoku is really effective. I mean, even with medium strength crosses, you have good trades. Your stop loss is just here, which is not too far. So if you are shooting for 295 pips and your stop is just about 100 pips, calculate the stats, you're doing well. So for example, if you come here, this is an interesting one. This, if I push this away, you see it is a strong cross. It is a strong cross because it happened outside the cloud. The cross, okay, happened outside the cloud. So in this Ichimoku 201 lecture, I'm sure a lot of people are going to be happy about the effectiveness of the tool and how to use the crosses, because as I said from the beginning, not all crosses are the same. So if this cross happened here, our risk management tool, which is our stop loss, is going to be here. Okay, let's put it here. Okay, that's here. Okay, this is where our stop is going to be. Let's measure our stop. Okay, how many pips is here away from the cloud? It's about 192 from the cloud. Okay, so then see how trade moves from that point. Trade moved about 1137 pips away from the cloud. This is a very powerful tool, capturing a lot of profit. Now Ichimoku users are very profitable. As I said in the last video, based on research, it's been said that the Nikkei, using Ichimoku on the Nikkei for the past 9 years has been the most effective indicator. Indeed it is. Even looking at it on the currency. So when we come here, we have a strong sell signal. It is strong because it is under the cloud. It's not within the cloud. If it's within the cloud, it's a medium strength. So it's a strong sell signal. So you see our risk management tool is here, where you have this line. and then see how the trade moves. I mean, it moves from that section. Okay, some people may use the 200 moving average as their stop, as their take profit levels. So trade moves about 300 pips down there. So it keeps going on and on and on, and you see trade keeps doing the same thing. I mean, and then let's look at this last one. This is this happened below the class, so it is a weak buy signal. We don't take weak buy signal, and indeed it's weak, so it plays around a bit. It doesn't really go far, and we don't take that because the resistance, the club is acting as a resistance. The span B and span A are acting at resistance levels, so we cannot take this buy signal. We leave it till it reappears again for us to take that buy signal. So thank you for listening to Ichimoku 201, and hope to bring you another video next week as we continue our Ichimoku lessons. You can visit us in our offices, and you can follow us on Facebook and Twitter as well. Thank you very much. Bye bye.